Good morning, everyone, and welcome to another edition of Bleeding Crypto's Market Update. Today is Saturday, March 18th, and we have a lot to cover on the show, guys. I'm going to do the continuation of our BTC coverage that we've been doing on the same chart. We've got we're going to talk about FOMOC, and we're going to look back at the dates of 2022 and see how they affected the market. We're also going to look at the heat maps for spot. We're going to look at the liquidation heat maps as well, provided by HyBlock. So we've got a packed show. So let's go ahead and get started. First thing I want to announce is my partnership with MEX Global. So I signed a partnership with them this week, and I wanted to share it with you guys. If you guys can please support it, that would be amazing. With partnerships like this, guys, they sponsor me, so they pay me for content to provide to you guys, and they pay me for my time. So in turn, obviously, I want to go ahead and I want to give you guys my referral link, encourage you guys to sign up. They have great liquidity. That's one thing that I've noticed. The three best liquidity in exchanges that I've seen, Binance, MEX, and Bybit, they have very good liquidity. I've used other exchanges. I like their interfaces like BingX. I use them. BigGet, I use them as well. But the lack of liquidity on some of their markets, like for instance, spot market, when Bitcoin had a move from 25 to 25,000 and it went up to 25,300. When I was looking, I was trading it on Bing. The price it's very different against other exchanges. You're talking about $300 difference, and the price wouldn't move. Now, it's great when you're going in because I was able to get in at a much lower rate, $300 cheaper than when I did on Binance. But the flip side of that is when you want to maximize that target, it doesn't reach there a lot of times. There's not enough liquidity there, so it gets a little frustrating. And I've talked to them about it through the past, and they're like, it is what it is. Comparing MEX this week, I had my MEX, as you can see on the very top, my tabs open, looking at their liquidity. It is so comparable to Binance, guys. It's really impressive. So I really am happy about this partnership. If you guys like it, sign up. Let me know what you guys think. Anything you guys need, just please hit me up. All right, guys, let's get the show started. I'm going to go ahead and leave a description for the referral link on the description of the video below. But if you guys want to just scan the QR code here, you are more than welcome. So let's go ahead and start diving into Bitcoin. Let's use a chart that we've been using. Now, I'm going to tell you I added a couple of things. So I'm going to go ahead and erase them. This was just basically a retracement of the move that we just saw. So I've been updating my Telegram group, and I've been updating my Discord group. So this right here was a move to the downside. So let me go ahead and just remove this. I want to start off where this is a flag pattern that I'm looking for a breakout. So let me go to the 1 hour real quick before I erase it. Just explain to you what I'm looking for. On flag, breakout, flag, potential breakout. So let me go ahead and just erase these things here for now. And we're going to take a look at okay, and I added two other things, guys. I added this liquidity heat, which no longer applies. When we were in here, guys, there was a very bright liquidity marker on the HyBlock liquidation at 27,000. And we went right up to it, didn't quite tap it. We were $30 away from it, came back down, and then boom, we tapped it. So this is no longer valid. So I'm going to go ahead and we already tapped that. And then this is very important. So I'm going to leave this here, and I'm going to explain to you why. And like I said, we're going to have a very packed show. So I'm going to try to go through this as quickly as possible. And if you guys want to play it at 1.5x speed on YouTube, it'll, obviously my voice will be much faster. It'll sound a little weird, but you can get through the video much quicker if you choose to do so. I already talk pretty fast as it is, so I don't imagine you really need to do so. But if you wanted to inclined to do so, please feel free to do that. Okay, so we're going to do this. We're going to We're going to continue from where we were on last update. I believe it was, what's today? I think it was Wednesday that we had the last update. I don't recall, so much has happened, and I'm into a lot of things right now, so I don't remember if we had broken this or not. The 14th, we might have. It doesn't matter. Anyhow, we were stuck on this 25,200. Now that resistance goes all the way back to August 15th right here. The week of August 15th is when we initially put that top in, and we struggled with that until we finally broke through it. Now, this candle to me, guys, is super important. Let me go back just a little bit to explain this move here. Do you recall when I told you that for me to rule out 886 and to think that this is a local bottom, I needed to see a break of this trend, and I needed to see a break above 25,200. So this was a downtrend, high, lower, low, lower, high, lower, low, so forth and so on. And we want to see the reverse. We wanted to see a high, a higher low, higher high. And when we did this higher high, I told you guys how unimpressed I was. I didn't like the fact that we were so close to this previous lower high. They didn't give us a higher high, this high, and it didn't give us enough room for another higher low compared to this one here. So this wasn't a very convincing reversal pattern. And we got stuck on here. We put a beautiful tweezer top, follow through, but then we put in this hammer. We put in this hammer. Look at the wick left behind here, and then look at this candle here. This candle is very significant, and I'll tell you why, guys. When you have an area of very strong resistance like we did here, breaking above it, just tapping it above here and coming, and staying here is not very convincing. Typically, that's weak, and it just ends up just coming. Usually, it ends up just coming down. When you want to prove and make a statement, better said, when you want to make a statement that you are reversing something, this is the type of candle you want to see. This is a $5,500 candle for Bitcoin, 25%. That's a big deal for an asset with such a high market cap. A 25% move is incredible to see. So this here, this is a 100% reversal candle. This is a candle that says we mean business. No more messing around. We are going to go up. Now, another thing that's important about this, and we're going to talk about that. How high can we potentially go? We're going to go look back at history. Like I said, we have a very packed show, so I'm going to go through it as quickly as possible. So this candle is significant as well. The reason I like it as well, that not only is it high in percentage, high in dollar amount, but it creates this space here. It creates this space above the 25,200 resistance level, so that the higher the space, by the time it closes, the more space it gives, it lends it for another, what is it? Higher low. I'm going to ignore this, and I guess I really shouldn't, but maybe it'll make sense when I'm done explaining it to you. I'm going to look at this, honestly, this right here as our high and our higher low, higher high. Now this is a type of room that we needed to see for the next higher low into our next higher high. Now, am I getting ahead of myself? I don't know. This, like I said, this to me is a reversal candle. And we're going to talk about different scenarios and what I'm looking for. We're going to look at the technicals. My chart is getting really busy here, and I'm wondering if I should. No, actually, I'll leave it alone. I'll leave it alone. Hopefully, you guys, if you guys have been following along, it shouldn't be too bad. Okay, so I have this. I also added yesterday. I added this to my Telegram group, and this is what I'm expecting to see because of the thrust of this candle, giving us this buffer. It now lends itself for a nice higher low and a back test of this resistance, prior resistance. This is very, very important, guys. And make no mistake about it. Before moving higher, the likelihood is that we're going to come back down and back test it. You don't create a resistance like this and not back test it. It's very rare. Now, it can take some time, yes, but typically it is going to do it much quicker than later. Now, hitting this 100 EMA is a target we were looking at in my Telegram group, and we hit it perfectly. And that's what this line was. I added this here. So when we're looking at lower time frames, when I'm looking at the 4-hour time frame, I can keep in mind that, okay, we weren't quite there. When we hit here and we stop, I know why we stopped, because this was a very important EMA to hit. Why? Because of this. Guys, I told you guys before, I am an EMA trader. I like to trade EMAs. They're very useful to me. Some people don't believe in them. Some people think they're a waste of time. If you know how to utilize them correctly, they provide a lot of insight. I have been using these for years, so they are very useful to me, put it that way. Okay, so why was this a very key level? Because one of the things that I've shown you guys and I've shown my students is that back testing is something that happens very often in crypto, in charting and analysis and TA. And when we lose support of an EMA, we usually back test that. We lost the support of the 100 EMA, which acted as incredible support back here in last year, 2022, excuse me. We acted as support. When we lost it last May, we never came back and back tested. I've been waiting since last May. I've been doing TA and my morning briefs to my Discord group that I do every morning, waiting for this back test. It took 10 months, almost a year before we hit it. So I knew that we were going to stop here. I knew that it was very unlikely we're just going to blast through this without some sort of resistance. But the fact that it took so long just goes to show sometimes it just takes longer than others. However, this one here, in my opinion, will come sooner than 10 months because we're establishing a market structure, a reversal pattern. We proved it with this candle. Now we need to back test that. Could this candle fail and come down here and break below it? Yes, 100% it can, which is why it's so important to come back down here and test that. So you've got a couple of things. You've got the back test of the loss of this EMA, took 10 months to hit. Then you have a market structure reversal pattern that we want to see to establish a strong foundation to move forward. I know everybody just wants to see an up candle and never stop. That is not healthy. That is not the way market structures are built. And you don't want to see that. Trust me, guys. Parabolic moves that just go and go and go without coming back down, they come down just as fast. You want to see that structure. Most people who are into TA can tell you that or have already told you that. Okay, so moving forward, I want to see, like I said here, you know what I haven't done? I want to see if I usually look for a 382 to point. I don't want to lose a 0.50 when I'm doing that back test. Actually, I won't turn on the magnet. I'll leave it there. Let me see something real quick, guys. From this move here and continuation rule, it's a little bit above. It's okay. It's a little bit above my continuation rule. Typically, when I see a higher low, I look for a point. Actually, I'm going to put a full fib on here, just a regular fib. I usually look at 382 or a 0.50. When it breaks down from a 0.50, it generally takes a little bit longer for a bounce. We end up doing some sort of consolidation, some sort of base, and then a move. So what I like to see is respect 382, 0.50, and then bounce. This one happens to be just a little bit higher, which is okay because this is a very strong area of support. To me, this has a little bit more merit than having to come down. And we can easily see a wick. We can see a wick to 382, candle base. That's the most important part, to be honest with you guys. If this comes down and hits 382 and wicks here and body candle closes above 25,211, likelihood we're going up. If we come down and we close below 25,200, that is concerning. We definitely don't want to see that. So I'll move down to here with the wick. I'm okay with that. All right, so let me erase this. Like I said, I don't want to put too much stuff on the chart. And let's see, what's the next thing I want to... I got so much stuff I'm trying to figure out how to present it to you guys. All right, so let's do the continuation. Let's do the bull case. What could we see? In order for me to continue with the bull case here, I want to show you something. And I like showing you guys previous history, the data. I like looking left. I call it looking left. Kind of gives you the answers. It's like a cheat sheet to what to look forward. Yes, I know markets don't repeat themselves exactly, guys, but they are so eerie on how similar they are that it's going to make a case for me moving forward in my next targets to the upside. So I want to make sure that before we move forward, that we just briefly touch. And I've touched on this many times before, but I just want to show you guys something. The swing high to the swing low of the previous move in 2017, we went up to 0.618. I told you guys, we talked about that actually on the last video. We were comparing where we may be here to where we are now, to where we may be could have been here in 2019. We're trying to make a little bit of a comparison. So remember this, guys. The underside touch of 618 was a very important level here, because in this level here, you have to remember the sentiment behind this. People were convinced that this was the new bull market. If you go back to 2015, you will see a very similar pattern evolving where we hit the bottom, we ran up, and we did this. We did this, guys. We came back and we back tested. Now, when we back tested these lows, we didn't quite hit this low. I don't know why this is wrong. This is wrong, guys. I'm sorry. I don't know why this has here. This should have been here. I apologize. This is right here, the low and the high. Right there. There we go. That's where it should be. When we came back here, guys, we came down to 30, depending on the chart you're looking at. This one here on Binance at 37.82. I think Bitstamp has it at 38, or Coinbase has it at 38.50, in that vicinity. When we came down here, guys, we didn't quite hit it, but we got very close here. Now, I talked about this last week, how this was a black swan event. You really can't plan for a black swan event, but there's always a reason to come down. That's one thing. Again, you can look back. You know what? I'm going to do that. I'm going to look back just to for the newer folks that are joining and that haven't really been, you know what? Let me hide this here, just so I can show you 2015, because I think it's important that you guys visually see what I'm talking about. We're just going to look at it real quick. When I do any measurements, I just want to show you really quick here, right there. Okay, this is a perfect example. This was the bull market of 2013. We came down, we retraced just like we did in 2017. We hit a bottom. Look, we hit a bottom right here. The bottom was $166.45. And then we went up again, and then look what we did. We back tested this bottom. As a matter of fact, this back test actually broke the previous back test. This was 166. This is 162. So you can see we broke. And then from here, after we back tested this low, the new bull run. And this is the bull run that led us to what most people who came into crypto, the majority of you guys back in 2017, that's what brought most people into the space that are still here, was the kickoff right here. This was a low. We went from what is this, $162 to $20,000. It took some time. Look, it took 2 years. It took 2 years to do that. In my opinion, guys, we are here. We are here. Just like we are, let me go back to our chart that I was using. Oh, let me go back actually, excuse me. We go here. All right, sorry about that. Okay. Just like we are here. Just like we are here, that's where I believe we are. This is 2019. I believe we are doing this. So the reason I want to make sure I emphasize that is because many people that are still sitting on the sidelines that believe that no, this is not a run. Unfortunately, as we go higher, they're going to think, damn it, I was wrong. That's okay. Everyone is wrong. No analyst out there is 100% correct. But my fear is this. They end up realizing that they're wrong in this wick. You see this wick here, guys? This was a full candle. This was a full grain candle at one time that went up to $13,970. This was bought. People bought this candle and they got pretty much slammed back down. And yes, eventually they were made whole a year later. They were made whole. But the problem is that people who bought this, guaranteed you guys, they capitulated here. They capitulate here. Most people who bought this wouldn't hold. And that's just the truth of it. Most people will not hold that. You can tell yourself all day long, oh no, I would have held. No, you won't. The psychology behind it will not allow you to hold. If you're not trained to hold, no, you're not holding it. So unfortunately, what I fear is that we're doing one of these events here, and the closer we get to 618, so let's go back over here. So let's do this now. We're gonna put our 618 fib here. And I really apologize. You know what? Just for the 618 fib, guys, I'm going to use a clean chart. I don't like explaining TA doing videos when the charts are so crowded. I think it just does a disservice for people who are not used to TA and they see a bunch of lines. It's very hard for them to concentrate. So I'm just going to use this right here. So what I'm afraid, guys, is that as we get closer and closer to our 618, if this is the route that it's going to take, I'm not saying we're going to get there. I'm not saying it's a definite we're going to get 618, but if it follows that same pattern, they're going to be buying it close to here and then before we slam back down. Now, that's what I really believe we're going to do. We're going to come into here, either hit 382 or 618, and 618 to me is a target that I'm really paying attention to, that I feel like it's going to get there more has a higher probability than I mean, we're almost at 382, but I believe that we're going to go, we have a good chance of hitting 618. So within this realm here is where I think a lot of people are going to be jumping in, and that's going to get us that impulse like it did in 2019, and then that wick down. The halvening happens in April of 2024. 6 months prior to that is when we normally kick off. However, history shows us we have in the prior, and if you go before 2013 bull run, you can see it happened the same thing. It back tested the lows. That's why I said if we break above 25,200, the likelihood of hitting my target of 886 becomes very, very slight. It would have to be a massive black swan for it to get that low, in my opinion. The more buffer we create, the less likelihood we're going to get there. This becomes our new low. 15,546 is now our new low. So now I'm focused on this here. The higher we go, again, we have, if there is some sort of event, which again, we never know what that is. And that's the thing about here, you have to understand, guys. We'll talk about this, and if it comes down here, people will tell you, oh, you couldn't have known. You couldn't have known. It's not. You're right. We don't know what caused it, but the TA tells us there's always a reason. So I don't like when people hide behind, oh no, you got lucky. TA doesn't work. You couldn't have known that COVID crash. You couldn't have known, this bank would have crashed. No, we don't know. But what we do know is that markets, all markets, including crypto, are controlled and manipulated. That is a 100% fact. And that's what we signed up for. Market makers are here to make money. They're not here to make you money. And there's always a reason why things will come up, and there's always a reason why things will go down. You see how the media is used to move broader markets. You don't think they do the same thing in crypto? 100% they do. But it's okay. You don't have to worry about manipulation or not. The good thing is that the manipulation is still done utilizing technical levels. And that is proven by using technical analysis. So when you say, okay, if it's manipulated, then how could you not predict, but how can you analyze something? Because when you throw fibs and you throw technicals and you look at support and resistance, it proves to you that the algorithms that they use are still based on technicals. They just happen to move it higher if you know where to look for, and when you come down, you have certain levels of support that the algos that were programmed to move the markets are utilizing. And that is proven by using technical analysis if you know how to use it correctly. And most analysts you see out there on Twitter, a lot of them, whether it's the Ichimoku cloud or the Bollinger Bands, whatever they use, they're still based off the same foundation: support and resistance. Where to buy, where to sell. The 1,000 indicators to tell you the exact same thing. It's just a matter of how you read the market, what you can relate to, what speaks to you. And for me, it's my EMAs, my fibs, support and resistance, market structure, price action, things of that nature. That's how I learn, so I stick to that. Yes, look, on top here, I have templates. I got templates for Ichimoku clouds. I got templates for MA instead of EMAs. I use them from time to time just to confirm my analysis, but I stick to a certain rule set that I use almost every day. And that is the rule set that I like to stick to. Now, let's move on from here. I wanted to talk about the FOMOC. So I think I covered where I'm expecting the price. Well, not expecting, but I'm looking for the price to go based on historical data. So 618, $48,000. I can make a very good case for it because we have data. It's not a feeling. It's not a hopium. It's not I wish we can make it up there. It's based on facts. Is it going to go in a straight line? I hope it doesn't. I really hope it doesn't. And most likely it's not. It's going to hit, it's going to back test. So for right now, this is what I'm looking at. Let me go back to this chart real quick here. So this is kind of what I'm looking at. For the short term, I'm looking for back test here to the 25-2. The 50 EMA, as you can see, is already curling up. Look at this. This is a 50. This is a 1 week time frame, and the 50 is already curling right here from the impulse of this volume. That's very significant. We close this weekly candle in a day and 10 hours. Easily see this come down. Maybe a wick to the 50 EMA. Body candle close here. The next area of resistance. We need to look left for that. Now, the next area of resistance is a little difficult one. Unfortunately, it's going to be about a $2,000 buffer. That's not very accurate, but let me explain to you why. When I look for future resistance, I'm looking for prior support. This area here where this box is not very clean. If you look back here, there was a lot of these wicks here stopped at a lot of different levels. So as an analyst, it's very hard to pick one. Which one do you pick? This one? Do you pick this one? Do you pick the candle? So there's so many in this area here that it's a little bit easier just to pick a zone, and unfortunately that zone is like $2,000. So here's where I'm looking. Somewhere inside of this realm here tells me that the likelihood is pretty high that we're going to hit somewhere inside of here. Now, I would say I can't imagine that we would go any higher than 30. We'll give a round number of 32 because 32 lines up. Let me show you real quick here. Let me snap this line. Let me go ahead and I'll snap a line. You see this candle body closes. Look at this. Really nice candle body closes here. Then you have this wick that's touching here. So we're just going to call it 32. I'm going to erase this. I don't want to have too much more than what I have now. So we're going to call that an area of interest for a top on this move. If we're going to play out this move somewhere in here. Now, can we find some confluence? Is there any confluence? I'm going to go to HyBlock. I'm going to refresh my liquidation data because, as you know, derivatives are a very big factor in how markets move. There's a lot of money in derivatives. Market makers, they want to go after those liquidations. They want to go, that's money for them, billions of dollars. So what I did here is we have three exchanges. So this is an aggregated view of BitMEX, Bybit, and Binance on going back only 12 hours. So going back 12 hours, look at the heat. Look at this top heat, guys. 32,825 is the top heat right now. We've got some strong heat here at 27,800, 28,375, 30,000, 32,850. Let's go back to our chart. 32,850. Let's go ahead and do this. The top liquidation is at 32,850. So I'm going to snap this line. I'm going to keep on here. So this is going to be our new line that we're going to keep on here, and we're going to color this yellow to match the high block, and we're also going to do right here high block liquidations. Okay, that's the top. I'm just going to put top. So that's the top of our heat map right there. Now, let's look to the left. Does this 32,875, is there any confluence? Have we found in the past, has that area been an area of support that we can say, okay, there's some confluence with prior? Look at this resistance here. Look at this support here. Look at this support here, here, here. Look at this support here. Look at this resistance. Look at this support. You see how all that just plays out, guys? By starting to look at one area of data, high block, looking at what the derivatives are going after, snapping down on your chart, then looking left, can you find confluence? See how clean that is? That is a type of formula. That's how you formulate, better said, I'm sorry. That's how you formulate a trading idea, or not so much a trading idea, but an analysis to where the price may go. You can't just pick you can't just randomly pick a number and say, okay, I think it's going to go here. You need to form a good case for it. You need to find confluence. You need to find a reason for it to go there. Not just because, oh, it's bullish, we're going to go up only. No. Yeah, okay, we're going up, but what path is it going to take? What resistance is it going to meet? What back test is it going to do? So we have a beautiful reversal candle. We have a strong area of resistance. Naturally, we want to look for that back test to confirm that this was a true reversal. Because if this falls back down below it, was this a reversal? Obviously not. It failed to hold it. So we're looking for this area here. And it makes sense that we would do it before breaking this area here of the 100 EMA. Now, why did we stop at 100 EMA? It's a strong EMA. It was a back test of the loss support from 10 months ago. So we understand why we stopped there, why this was so significant, why this is so significant. So now we formulate a plan. Okay, now if we do hold it, and this was a true reversal, this was a higher high, we're putting in that higher low. Where do we go from here? And that's where you start formulating that plan there. So let's do this. I want to do a harmonic pattern. And this is pure speculation. I just want to see if the data lines up. And again, this is the path that an analyst takes when he's trying to analyze movements in a market. We don't just guess. We try to come up with different tools, different techniques to tell us not to tell us, but to kind of guide us on where the possibilities may lay. So what I want to do is I want to do a harmonic pattern off of this move. Okay, we're going to say, and I'm assuming that this is going to be the top of this candle. Maybe it might go a little bit higher. I don't know, but for right now, I'm going to do that. And I'm going to clone this. So now what I'm going to do is, if we do a back test of this here, if we actually do, and this is the bottom, do I find confluence with a harmonic pattern to an area that I could say, okay, there's a reason to go there. There's a reason for it. Lines up perfectly with the high block. Lines up perfectly with the prior support and resistance. Guys, I didn't practice any of this. I did this as I'm going, just to show you guys how things work out. Again, it's all about finding patterns. That's what a technical analysis does. You see how we just came up with confluence after confluence, how everything just lines up. It doesn't mean that it's always going to follow exactly that path, but it's a good chance that if you utilize the same type of technique in the past and it's played out more often than not, then you can utilize that moving forward and not expect, I won't say that's the correct word, to expect that it's going to work out, but you have a better confidence that things are going to work out. Look at this. Beautiful. I mean, I've been doing TA for 6 years, and I still get blown away when I see things like this, because it's just like everything lines up so perfectly. It's like you're living in the Matrix. I never understood that term when people would say that you live in the Matrix. I'm like, what the hell are they talking about? When you see stuff like this, you're like, wow, this shit's incredible. All right, so I hope I made a clear case for what I'm expecting. Okay, I keep on saying that word. What I'm hoping to see is honestly what it is. I'm hoping to see that we can make it up to 48,000, but we need to take a certain path. And to take that path, this seems like the most logical way of doing it. And if we do it, once we get there, then we will continue to look forward. Now, a very important thing I want you guys, we're gonna now make a case for the downside. I don't like when people get overly excited and they just make a case for the bull. Oh, we're going to go here, and they don't make a case for the bear. And I also don't like when people that have a bias, they're like they're perma bear bulls, and they don't want to listen to anything else, any scenario at all that can get us to go back down. That's doing a disservice, guys. You're doing yourself a disservice. You got to have both options available to you, whether you want to hear it or not, so that you can have you can plan for it and you won't get caught off guard. That's the worst thing that you can happen to you guys if you're not planning for something and it happens the opposite of what you thought, and you're caught off guard because you start making irrational decisions. You didn't plan for it. You're making hasty last minute decisions based on uncertainty. And that's what you don't want to have, that type of mindset when you're trying to enter into a trade or you're trying to analyze something. So now let's look at the downside. And to do that, I do want to use a different chart because I want to clear it up just a little bit here. To the downside, we're going to do this. I'm going to erase this here for now. And this is going to be very important. We're going to go to the daily chart. And I'll explain to you why right now. We're going to go back 2022. Here we go. This is all of 2022. We're going to go to the FOMOC. FOMOC only has meetings every quarter. So there's only going to be four lines on our chart. The first one happened on January 31st of 2022. So we're going to snap a line January 31st. So let's snap a line. And we're going to see what FOMOC did. And I know people out there, I can already hear it. They think, oh, well, this is a new year. Yeah, it is a new year. But again, we're analysts. We don't have the luxury of ignoring the data. We have to listen to the data, and we have to take that into consideration of what could happen. So the next FOMOC meeting, I was looking at the wrong date. FOMOC 2022 meeting, January 25th. I'm sorry, this January 25th. 25th, right there. Okay, so that's January 25th. Then the next one is March 15th. March 15th. Here we go. Okay, then we have then we have May 3rd. All right. This isn't. Oh no, March. No, I'm sorry, guys. This is May 3rd, and then. I'm like, why is this shit so close? And March 15th. 15th right there. Okay, and then March 15th, May 3rd, June 14th. Let's go to June 14th, right there. All right, and I don't understand why this is June 14th in July when it's every... Oh, these are the minutes? No. I apologize, guys. I'm looking at this, and it's giving me these dates, but they're too close. I was under the impression that it was every quarter. It wasn't monthly, and I have dates that are too close together for it to be every quarter. So I am going to I'm going to X this because I got to do more research. I don't want to give you guys false information, and these dates that I pulled up here, they're too close. I got September, November, December. Obviously, they didn't happen in that order. And I don't have any explanation and I don't want to take your time to do that right now. So I'm going to go ahead and just forget about this. Just know that during last year, I did have a chart that showed that. I'm sure it's somewhere in my feed, in my Twitter feed. And the FOMOC release of the data did cause the markets to pivot to the downside on the majority of those dates. Unfortunately, I can't show it to you now. I apologize. I should have. I guess I should. Like I said, I don't rehearse any of this. I try to do it on the fly so you can see my my thought process on how what I, as an analyst, what do you look for? Where do you start? And that used to be the most difficult part for me. Is okay, if I'm going to analyze something, where do I start? You know, that used to be the most difficult part when I was trying to learn how to do TA. So I want to kind of walk you through that process. I know it's sometimes a little grueling, a little tedious, but everything starts coming together slowly but surely. You start finding confluence, use different tools, and I want to show you that. So I don't have this. So this backfired on me. I apologize. Let's go back to here. Downside. Let's without utilizing the FOMOC, and just knowing that next week we do have I believe it's Wednesday or Thursday. What could we possibly see? Could that be, at least if we continue to be bullish into FOMOC, could that get us to come in and back test? I think so. I mean, it seems reasonable. Doesn't say that's going to happen, but if we can close this candle, even if we close it below the 100, I'm okay with that. I am 100% okay with that, as long as we don't close it below 25,200. And the way things look, with the volume, the candle, the force of the candle, the percentage of the candle, the gap that it has, it gives me the impression that we are going to close above here. It's more likely that we close above than below. If that's the case and we continue to go, then I'm going to treat FOMOC not as a complete reversal, but as an opportunity to backtest this. I do not want to get up here on a straight weekly candle again. I don't want to do that, because that doesn't build market structure. This had a perfect market structure on the way down. They brought this down in a way that gave everybody hopium, and in a way that they took people's money on the way down. Because every one of these events that caused the market to go up caused a sentiment in the market for people to put their money in, they take it away. Put their money in, they take it away. Put your money in, they take it away. Put your money in, they take it away. That is what the market is designed for. So here, we were conditioned for nothing but downfall, that by the time you see this, your mindset is, they're going to take it away, I'm going to short it. They're going to take it away, I'm going to short it. And now they're doing the reverse. Give them false hope. Let them think this is just a dead cat bounce. We'll take their money. Let them give them false hope. We'll take their money. Give them false hope. We'll take their money. It's the reverse psychology that they used here. They're going to use this. And by the time you break out of that, unfortunately, we may be close to 618. By the time you flip and say, okay, forget it, the bear is not going to happen. We're not going to be testing any lows. We're going to all-time high. Usually it's going to be right around that 618 area. And that's when they bring her down to back test this. Is it too soon to run, guys, to a new bull market? I think it is. I think this is still too soon. I think this is a 618 touch, and we're going to run up until we do like we normally do. Normal markets will run into the summertime. Come to summertime, what happens, guys? Markets come down. And then what happened? August, September, we start heading back up. So I think that's what I think we're going to run. FOMOC, I don't think it's going to reverse it. I think FOMOC has a good chance of getting us into here. We're going to continue to run into the summertime. Come summer, we're going to correct, test these lows. And when I mean test these lows, I don't mean we have to come down to 15,000. I'll be looking for probably 786, 886 like we did back here. Look, let's measure this really quick here. Let's measure this real quick. I got to go. So I have to go to the gym. My wife has a class, and I got to get out of here. I do free weights. She does classes. And where's the top of here? The top of... So here, look, we came right down to 886. Candle bodies, 786. Wicks to 886. So hypothetically, I don't know if it's going to go to 48,000, like I mentioned before, but just I'll use this chart because it's not so crowded. Hypothetically, we make it to 48,600. So let's just say 48,000 right there. And we come down to these lows. Am I looking at 886 at 11,377? No, I'm looking at 22,000, 19,000, right side inside of here. As a matter of fact, to play it safe, you're better off doing this. You're better off looking at these numbers right here. These numbers here, 618, 706, 786. You can have a stink bid. Have a stink bid at 886, but this would be a safe area. If we make it to 48,000, this is where I'll be placing bids. I'll be placing bids at 27,400, at 24,644, 22,000, and whatever that, let me see, well, what would 886 be then? 886 would be 19,025. That's where I would be putting at. Do you see how that works, guys? Do you see why the higher we go, the less likely we're going to come back down? Because history tells us that. It's not that it's impossible to get down to 886, but it's less likely to get there the more we move here. Because history has shown us that, yeah, back in 2015, we broke the prior low by $4. Okay, so let's just say we follow 2015. Okay, so we're still going to be above 15,000. So if we follow 2019, we're going to be within this realm here, between 22,000 and 19,000. If we follow 2015, we're going to be at 15,200 bucks. Probably not even that. 2,000. That was literally was $4. Remember, it was 166 to 162, $4. So we'll be at 15,462 bucks. But again, below is unlikely, not impossible, but unlikely. All right, guys, I think that, oh, you know what? Let's look at we looked at HyBlock already. Let's look at the spot markets. Look at this, guys. Look at this right here. We have heat, not strong heat, but we have heat at 30,369 Bitcoin order. You can see the difference. At 29,975, there's an order for 9.2 Bitcoin. At 30,369, you can see the heat already formulating right in there. The higher the order, the brighter this gets. But as of right now, we got a 30,000 heat on spot, which we come back here, is their confluence to what we've been talking about. So this is spot market, 30,000 right there. 30,000. Right here. So I'm just going to snap that. So this is spot. This is derivatives. And what did I tell you about that window? That $2,000 window? There it is. It's not exact, but again, there's that confluence in this area here for that next push to the upside. But I'm still looking for a pullback, confirmation of the bull break, establish a foundation. Our harmonic pattern aligns very well with the derivatives liquidation point, lines up very well with our prior support and resistance area. Spot market would get tapped by then. And this here, again, becomes a very good area for some profit taking. If you're in a trade, if you're in a long term, if you're playing it long term and you just want to buy every dip, wait for the next dip in there and buy it for the upside. What I am going to caution you on, guys, we don't know if we're going to go to 382. We don't know if we're going to go to 618. How do you protect your capital? Ride your stop loss, guys. Ride your stop loss in a very sensible, with a sensible buffer. Now, if you guys don't know how to use stop losses, guys, you guys better learn very quickly, because a lot of people are under the impression that a stop loss is a guarantee for you to secure your position, and it is not. You could have a stop loss and it never fill. One is that you can have your stop and your limit and your stop too close together. So if you have a very big order and you put your stop at, the stop limit at, say, for sake of the video, $10, and you want to sell it at $10. If your order is big, it's there, and too many people have their stops there, you're not going to get filled. You're not going to get filled. So you want to put your stop at, say, 10, but you want to get filled at I lost my train of thought. You want to make sure that you apply it so that you don't utilize the same dollar amount. So you can say, I want to stop it at 10. I'm willing to sell it at 8. So that when it stops, you have that buffer. You're willing to sell it less than other folks, and you're more likely to get filled. I hope that makes sense. If whenever you look at a stop limit order, it'll tell you where to stop it, where you want to sell it at. That's how those work. You want to make sure you have enough, because when this thing cascades down, if you don't have enough people willing to buy it, your order is not going to get filled. The exchanges are not going to take it off your hands. They're not here to help you. You're playing against other buyers and sellers. If there's not enough buyers, when this thing's coming down, your order will not get filled, and there goes all your profits. Now you're chasing it down. Now you're market buying it down and get whatever you can get, whatever scraps you can get, and all the work that you put up on the way up is gone. So hope that helped, guys. I know there's a lot of information. I try to cover it. I hope I didn't miss anything. Guys, if you can please hit the like button, that would really, really help me out. If you hit the like button, guys, if you like this information, if you think this is useful, please hit the like button. Please sign up to MEX and support me and my affiliate. Make me look good with the folks over at MEX, that you value this information, that you appreciate that they sponsored this video, and then let's make some money, guys. Let's make some money. Please join my free Telegram group. Send me a DM, guys. You want to join my free Telegram group? Just send me a DM. I'll tell you how to get there, and let's all make some money. All right, guys. Have a very good day. Have a great weekend, actually.